Good evening, everybody. How y'all doing? Hopefully everybody doing well. Let me I forgot to send out the bat signal. Matter of fact, I ain't even put the link in the Discord. Let me see here. I ain't even put the link in the Discord. I got to go over here. Put the link in the Discord. Put the link in the Discord. Everybody. Put the link in the Discord. Everybody. I'm tweaking. All right. Got the link in the Discord. And let me share the link inside the YouTube chatter rat tat too. If anybody want to pull up in the YouTube chat, if anyone want to pull up in the hey Kim, what you retracted? Don't be retracting nothing. Say it with your chest. Say it with your chest. Don't be retracting those statements. Let's see what's going on here. Learn and share. What's up, Rhonda Green? What's going on, Kim, with the retracted statements? What's going on, honey? Got honey in the building. What's going on, Seawalk? What's up, Marco? Typos. It's 2025. We all speak typo. What's going on, Deborah? Hey, Deborah, if you at the house, tell my dog sure when I said, what's happening? Deuce. Who saw that movie South Central? Deuce. Was it South Central? What name of that movie was? I think it was called South Central. Deuce. OG Bobby Johnson. Hey man, how y'all doing today? I didn't watch Price a lot today. I watched Price for a little while this morning, like when I was on with the gang. Then I watched it a little bit going into like lunch. I think I didn't watch it a lot, but did Price do anything today that caught anybody off guard? Right? Did Price do anything like that you did not? Y'all hold on for a second. See, my niece had text. Oh, she's just replying to something. I'm supposed to be picking my niece up later on. She coming back from a cruise. I'm supposed to be picking her up, her and her daughter. And I thought she was texting me, but she was just replying to like a family group chat. But did Price do anything today that like caught you off guard that you wasn't expecting Price to do? Like, if it did, yeah, South Central, Hoover Deuce. Yeah. If it did something you did not expect Price to do, pull up in the Zoom and be like, hey Tim, I got a question. Right. And speaking of hey Tim, let me do this right here. Let me do this right here. Excuse me. I'm sorry, y'all, for yawning in your faces. So, all right. Good evening. If this first time tuning in to Tim's Tidbits, please allow me to say, welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say, welcome. But I want to give you a nice hearty, Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo Espanol. And you are now in tune to. Before I show you what you're in tune to, let me hit you with my disclaimer first. That's my disclaimer. And you are in tune to the intraday price action recap. And this episode of the intraday price action recap is being brought to you by, drum roll please, the Smart Money Manuscript. Yes. Let me come back on the screen and talk to y'all. See up there, it says, Unlock Wealth, your step-by-step guide to actionable financial insights. The Smart Money Manuscript. Now, what is the Smart Money Manuscript? The Smart Money Manuscript is, y'all remember when I was talking about Back to Basics, the video series? Well, Back to Basics, that did not, how can I say, roll off the tongue correctly. And it did not encapsulize everything that the Smart Money Manuscript is about, right? So the Smart Money Manuscript, it is going to incorporate everything that I've ever discussed on this YouTube channel from the absolute beginning to the absolute end. It's going to start with somebody who doesn't even know what the stock market is, and it's going to go all the way through somebody who's an active intraday trader. So everything from not knowing anything to wanting to manage your own retirement portfolios, to wanting to manage your own investment portfolios, to wanting to trade options, to wanting to buy and hold, to wanting to trade futures, to wanting to everything from not knowing anything all the way up into using ICT concepts, right? That's what the Smart Money Manuscript is going to be, right? So Back to Basics, that name just did not. Back to Basics was like the name that I got when it was, I was just going to do something just for the gang. But then when I say, you know what, I'm going to do something for everybody, even those that's not even in the gang, right? And so that's when I said the name has to change. Now the name has changed, but gang, like I told you before, right? It's everything that I've ever discussed on this channel. So gang, you will have access to it for absolutely free. The low cost of free 99. If you're not part of the gang, if you haven't been a part of the Discord that's paid through WAP prior to May 27th, 2025, right? Then you will have to purchase it. The fee will be, I've decided that the fee will be $69.99. Why did I pick $69.99? Not going to tell you that because I don't know why. It just popped into my head. Then that's the price, $69.99. Now, what's, will that change? I don't foresee it changing, but if WAP can't sustain what I'm trying to do, then that may not be the price, because just like in the past, the reason why I haven't done a course in this amount of time I've been doing this is because it costs a pretty penny to host a course, meaning to host a course online where like, because if I could do it through YouTube, but when it's a course that people are paying for. I don't want somebody to be able to take these links and go share it with somebody else for free, and somebody's actually paying for it. And then because you can share YouTube links, right? And I want it to be an automated system. So I'm not going to do it private links where I have to manually put your YouTube email connected to that video. No, it's going to be an automated process, right? So WAP seems like it's going to give me the option to be able to do it and not have to charge a lot for it. But if WAP can't sustain what I'm trying to do, then you know the price uh may change. But right now, $69.99. That's what I plan on doing it for. Gang, you have access to it for free. You know, I know there are gang members that be like, hey, Tim, I just want to, I'm going to buy it to support. I want to buy it for my kids. I want to buy it for my cousins. I'm not going to block my blessings. The link will be out there if you want to go and purchase it. If you want to support, if you want to buy it for somebody else, the link will be out there. I'm not going to block my blessing. I'm not going to, because I can go into WAP and make sure that y'all can't buy it. Because I can go in and say, all of these people can't buy it, right? I can do that, but I'm not going to block my blessing. If y'all want to support it, support it. But it's called the Smart Money Manuscript. That's what it is, right? That's the new name for it. So whenever you see the Smart Money Manuscript, just know that that is what I was originally calling Back to Basics, right? It has a new fancy name, the Smart Money Manuscript. And for those coming in late, that's what I'm talking about right there, the Smart Money Manuscript. Now, with that out of the way, let's go ahead and get out of the way. Let's go ahead and move the charty arts over here. The chart. Oh, you see that? I came over here. I came here in the afternoon. I can see right here. That's how I know, because that right there is 130 and that right there is 145. That high and that low, that's the highest high and lowest low in the afternoon. So I did come here in the afternoon. I marked that out, and that's all I did. Right. And as you can see, right, I marked it out on the September contract. The reason why I did that is because when I opened up my NinjaTrader trading platform this morning after I got off with the gang, I was, watching price, and I was going in to try to see if price was going to offer me anything that I liked as far as a setup. And when I opened up my NinjaTrader, it rolled my contracts forward, right? And for those who wonder, hey, when should I roll my contract forward? Because when I look at the continuous contract, since we're looking at it, since this is the ES right here, we'll just stick with the ES. I'll just say ES1 exclamation point, right? And I'll go to the 1 day chart. And then if you look over here, you see this little arrow thing right here, right there. That little, come here, mark stuff up. Right. You see this little arrow thing right there? That right there says contract switch, right? Contract switch. That's the day right there that the contract rolls over, right? That's the rollover date right there. And that's today, June 16th, right? Contract switch, right? And then over here, like on the 20th, over here on the 20th, that's the actual, you can't use it no more, right? That's when this is the quarter. This is the quarter. So this is like the quad witching period, right? When you got like all these different expirations, right? You got like, it's 4 different expirations. Don't ask me to quote it. I haven't like researched it in a while, but I know it's like futures, options on futures, and it's like 4 different types of contract expirations that's happening at this time. That's why they call it the quad witch, right? You got the triple witch, you got the quad witch, but you got 4 different expirations happening, and it happens every quarter, right? It happens every quarter. So that's what quad, which is, and so, but today is the contract switchover day. Now, Michael, he teaches um rolling your contracts. If you roll your contracts manually, right? Ninja Trader rolls it automatically, right? But if you roll your contracts manually, like if you use TradingView to change, right, and you trade on the front month, you don't trade inside the continuous contract, you trade on the front month. Now, if you're in the front month, I don't think they have that little arrow thing on the front month. Let me see. Let's check and see. Let's go to the front month. And then, yeah, they don't have that little arrow thing there, right? And then if you look here, they got like the contract expiration, right, on the 20th. That's the day that you can't use the contract anymore, right? That's saying, when I say that's the date, the 20th is the day you can't use it anymore. You can't use this contract anymore. Like the 20th, it's expired, right? So you can't use this one anymore. So if you're trading on this one, right, and you don't trade on the continuous contract, right, and so you would have to roll it, you have to switch to the next contract manually, right? Michael teaches, if you go to barchart.com, bar chart, this is, you don't have to go to bar chart, but this is just one of the places you can go, barchart.com, and you'll put in the instrument that you're looking at, right? We're looking at the ES right now, right? You can look at it, the ES, the NQ, whatever you trade, right? So we go just type in the ES, and then you come down here, scroll down, right? It says more SP 500 quotes. You click on all futures prices right there, right? And when you click on all futures prices, you see this is the cash, right? ESY cash, ignore that, right? Then you see ES June, right? This is the M contract. This is the front month, right? And then you see ES September, the ESU contract, right? You look at these two right here, and then you scroll over, right? Matter of fact, let me make this big just in case somebody can't really see it all that well, right? Get out of the way, cookies. All right, I might have made it a little bit too big. Okay, right, you look at these two here, the June contract, this is the front month, whatever the front month is, you look at the front month, that's going to be the first one under cash, and then the next one that's coming up, right? And then you scroll all the way over where it says volume and open interest, right? You see right here. Now, don't quote me, I can't remember if he switches when there's more volume on the new contract, or if he switches when there's more open interest on the new contract. I can't remember which one it is, right? I ain't gonna hold you, but you look at the volume and the open interest. What the volume is the number of contracts that are being traded on this expiration date, right? So you look here, there's even some contracts being traded on the December contract right now. People with big money, and they're going whale out, they're trading contracts on this December also, right? So right now there's more volume. There's a little bit more volume happening on the September contract than the June contract, right? There's still more open interest on the June contract, meaning this is the amount of contracts that are still open. The volume just lets you know how many contracts happen. They could be open, they could be closed, whatever it is, but the volume is the amount of them that happened that day. It was 2830 on this one, and it's 2816 on this one, right? Because everything's still active right now, right? The numbers are changing. So they're opening and closing contracts, and this is the amount that's happened. This is the volume, right? Right now, there's still over 1.6 million open contracts. These are the contracts that are still open, right? On this right here. By Friday, the 20th, this 1 million, this 1.6 million has to close by Friday, right? That 1.6 million has to close by Friday because this contract will be expired. So by contract end time on Friday, right? Whatever time that is, I ain't gonna sit up here and be like, oh, I know it's this exact time. Whatever time that is on Friday, this 1.6 million contracts has to be closed, right? And they need to be rolled over, either closed completely or rolled over to one of these future contracts. More than likely, it's going to be what will now be the front month after Friday, right? To the September contract, right? So you look at this right here and you say, hey, we got more activity going on the new one. I'm going to roll it over. Or I don't know if he teach, wait till you got more open interest, but I think he teach volume, like activity, more, which one got the most activity going on, if I'm not mistaken. But this is how you find out a good time to go ahead and roll over your contract, right? Right. A good time to roll over your contract. So we got more more volume on the September, more open interest on the June. And if we go to NQ, right? If we look at NQ, why is this? All right. If we come to NQ, all right. Right. We come to NQ. We got. Is that right? Yeah, that's right. That ain't much volume. That sure don't look like much volume. But we got more volume on the NQ, right, for the September contract, and more open interest on the June, right? So you got more volume on September, more open interest on the June. I don't know why that volume looks so low. Only like 900 contracts. I want to do this start over at 6. I wonder if that starts over at 6. This volume. It probably do, because they started over, because that looks really low. Right. I want that volume starts over at 6 o'clock. That's got to be. All right, let's look at end. Yeah, yeah. See, all right. So end of day, like when you look at end of day on the June contract, it was a lot more volume on the September than the June, and it's still more open interest. So yeah, that starts over at now I see it starts over at 6 o'clock, right? Because I'm like, that volume look mad low, right? But yeah, so that's how you can go in and figure out when you want to roll your contract. And then you see here, now that it started, it's still more volume happening on the September, right? And NinjaTrader already rolled over, right? So NinjaTrader already rolled over automatically. And if you don't have yours set to roll over automatically, you can come in and look at here. Bar chart is one you can come in and look at. And I think you can do it on the Chicago Board of Exchange. I think that's CBOE. I think that's what it stands for. Chicago Board of Exchange. What is it? What is the thing? Is it CBOE? Chicago. What is the thing called? I'm having a brain cramp. Somebody help me out. When you go to CME, Chicago Mercantile Exchange. That's what it is. Chicago Mercantile Exchange. I think that's what it's called. Yeah. Is it Mercantile, Chicago Mercantile Exchange? Yeah, something like that. CME. And where is it? I don't know. I can't remember where it is on here. I can't remember where it is on this one here. Volume open interest. Right there, volume and open interest. So you go to the one you want to see, click on volume and open interest, And then you see like the June and the September. And then we got total volume here, right? So on here, the June still has more volume, right? So on the CME, it's showing that the June still has more volume than September, right here for total volume. Um, and then at close, it also got more volume at close, and it got more total volume, right? Than the September. And but on the bar chart, it June September has more volume, right? September has more volume, right? And CME, I think it's Chicago Mercantile Exchange or something like that. Yes, no, Chicago Mercantile Exchange. Yes, Chicago Mercantile Exchange. I've been saying that wrong because I always say mercantile, but it's mercantile. Mercantile Exchange. I've been saying mercantile all these years. I've been saying that name totally wrong. Oh man, my wife just texted and said that my sister-in-law Rottweiler just died from a heat stroke. Oh man, Rico wasn't even that old either. Rico, she just got Rico like 2 years ago, if that. Or he was a puppy. He was like a puppy like 2 years ago. He was like he was about this big about 2 years ago. He was like a little old small Rottweiler puppy. And was it 2 years ago? It ain't been that long. At the most three. At the most three. It was like my niece graduated from college. She graduated from college. When did Kiara graduate from college? She graduated from college, and my sister-in-law bought her a dog, and she named him Nico. And then when she gave him Nico, she changed Nico name. Kiara changed the name to Jabarkis. And then after Nico is when she bought Rico. She bought Rico, and I was like, oh, she bought Rico to replace Nico. So it at the most it's got to be 3 years because Rico was a little old puppy. And I was like, what in the haberdashery? Oh, man, it's hot in Columbus, Georgia, man. I'm telling you, it's hot out here. Oh, Rick, and he an outside dog. And my sister-in-law, she worked like all day long. And so, and they got a porch. They got a porch and a pool at her house. So she got a pool outside and she got a back porch outside. I guess it wasn't enough for old Rico. Man. Anyway, I'm sorry, y'all. I I'm all over the place today. Anyway, let's talk about price. Right. Let's talk about price. I keep it here. I keep it here on the June contract since that's where I got my lines and stuff at. Right. Um, as you see here, this is our new week opening gap. We had a bearish new week opening gap, meaning we gap down, right? Meaning we gap down. Um, you see here, gang. Um, right? Looking here, based off what we was talking about earlier, on the when we did our tape reading, right? We was talking about getting a soft bias, right? How you get a soft bias for how I get my soft bias for the time frame that I'm looking at. So how I get my soft bias, I just come to that time frame and I look to see if the candles are making higher highs and higher lows, or if they're making lower highs and lower lows, right? And if the candles are making higher highs and higher lows on there, then my soft bias will be to the upside, right? That's just a quick way for me to get like a soft bias. We was talking about that earlier on the tape reading stream, right? Because we're in difficult times, like a lot of consolidation, a lot of back and forth, and sometimes people struggle with like how to gain a bias, right? And so that gives you like a soft bias, right? So on the week, right, we've already established, based off of all of the algorithmic principles, that we're looking for the on the weekly time frame, we're looking for buy side, right? But everybody knows that nothing goes in a straight line in the stock market. So we utilize, you know what I'm saying, other time frames to figure out how to trade intraday, right? And then we said that the weekly candles was making higher highs and higher lows. So we were, our soft bias for the weekly was to the upside, right? Then we said that the weekly had a reason to come down here, right? We had the wick of an order block right here. We had the wick of a bullish order block right there. We have a inversion fair value gap down here. So the weekly has reasons to come down there, right? We see that we opened up, we gap down into the wick of the order block, right? At the open. Okay. Now in hindsight, we see that we have rallied, right? So anytime you're bullish, what do I always say? You want to see a move down prior to a move up. Now, since this is a weekly time frame, I personally like to see the beginning of the week go down. I don't like to see the beginning of the week go up when my bias is bullish, right? I don't like seeing it go up first. But since it did gap down, right? It did gap down first and then it started going up. But like I say, I like to see the beginning of the week, Monday, maybe even Tuesday, come down, right? Before going up, right? But we can't always get what we want. We watch the signatures, right? Then we look at the daily time frame, and then we see that the daily time frame had a short-term bearish bias, right? We were making lower lows and lower highs on the daily in the short time, right? And that's why I said the weekly had a reason to come down here, right? The weekly had reasons to come down here because on the lower time frame from the one you started, right? If the bias is opposite, right? You want to see if the higher time frame has a reason for price to go in that direction. And then if it does, then this opposite direction is warranted because you need the lower time frame to trade in a different direction than the higher time frame bias to get to the discount or the premium that you needed to get to participate in the move. Okay. So the daily was making lower lows and lower highs. The daily came down and took out this sell side on the ES, right? We came down and took out that sell side heavily on the YM, right? That was the same relative low, right? And then it did not take it out on the NQ, but the NQ made an exact equal low, right? It made an exact equal low right there. Boom. So if you had a market order sitting right there at 21,471, you got taken out. Now, if you had a market order sitting anything below that, you did not get taken out, but it printed that number there, right? It printed below that number there, and it printed well below that number there. So in this case here, since the higher time frame is bullish, right? I'm counting this as bullish SMT divergence, right? Because we came down to a discount PD array, order block here, order block here, right? And well below the order block there. We came to a total different order block over here, right? But this lines up with that wick of that weekly, right? That weekly order block we was looking at, right? If we go back to the weekly, right? This is our weekly order block wick right here, right? And if we go back to that daily time frame, right? So when we come into this order block, that order block, that order block, all of that is inside the wick of that weekly order block, right? So we're coming down to discount PD arrays. Oh, my wife just texted and said he was only like 18 months, maybe 2 years old. I knew it wasn't long. I knew it wasn't long. Said he was 18 months, maybe two. Yeah, so he was huge. But he was still a pup. He was still a baby. Because I remember when he was like 6 months old and he was too big for me to even try to touch him. When he was like 2 or 3 months old, I would go over there and mess with him. But when he was like 2 or 3 months old, his paw was this big. His paw was as big as my hand when he was like 2 or 3 months old. And I would go over there and play with him and he would like jump up on my lap. He'll jump up on my legs and stuff. But when he got to be like 6 months old, I wouldn't let him. No, don't. Rico, don't touch me. When he was 6 months old, he was like at my hip. When he stand next to me, his head was at my hip, and I'm 6'2". His head was. I'm like, Rico, don't touch me. Get off me. He was two. That was a big dog. That was a big dog. He was like one of them full blood Rottweilers. But anyway, right. Looking at that as SMT divergence, and then so now we took off, and now on the daily time frame, right? So you'll be watching this, and for your quick bias, right? You see today, right? The daily counter made a higher high and a higher low, and then you will watch the next day to see if we make a higher high and a higher low to see if it's switching back to a soft bullish bias, to line back up with what the weekly had. The weekly had a bullish bias, right? But like I say, I don't like starting off the beginning of the week going up when I'm bullish, right? I like to, start down, but given like how we've been trading and where we are, right? The buy program has been extremely strong. We talked about that before too. We haven't been getting a lot of retracements. We've been, we've been getting very shallow retracements. We expand up, shallow retracement, right? Come over here, expand up. This could be another shallow retracement, right? We did take that sell side. We've been getting very shallow retracements when we in this buy program has been super strong, super, super, super strong. All right. Let's go right down to 15 minutes. Right. So we go down to 15 minutes, looking at our 15-minute time frame here. It was a strong uptrend all day, right? And gang, remember when we was talking about right? Sometimes this is our 9:30 candle. That was like sometimes you just gotta let it go, right? Once we took out Friday's high, all we did was just pull back into the range, right? So if you would have been chasing this, remember we talked about like this ain't the time you want to chase. If you would have been chasing this and say you want to buy when it traded back down into this 15-minute fair value gap that was created at 10 o'clock this morning, look at there. All it did was come back down, right? If you want to buy here, all it did was come back down, right? And let's just say you put your stop right there and you was to hold it over the break, right? Now it's coming down here and your duty hold is real tight, right? Your duty hold real tight right now because you looking like, man, it's fun to come get my stop. right? I shouldn't have chased this. I should have just waited for it to come back down into a discount. All right. Because what we talk about this morning on the live stream, right? Trading above this high right here extended the dealing range in this direction, right? This we came down here, right? And we set a new low there, right? And then we came up here and we set a new high here. So we have a new bullish dealing range that we're inside right now. No. I'm sorry. The week. The week is what extends it higher on that's on here. That's the NQ. Let's check the NQ. I mean that's the ES. Let's check the NQ. Yeah, it's the same on both of them. Okay. Yeah, it's the same on both of them. So the week will extend the bias, the uptrend, the buy program. It will extend the dealing range up, right? Trading above the week. Okay. So right now we've just come above. This is the internal liquidity. Remember the two levels this morning we talked about. There's our 930 open that we had mapped out right there. And then we said we got 2 levels of internal liquidity inside this bearish dealing range right here, right? We got a bearish dealing range right there, right? New liquidity pool there, new liquidity pool here, right? We inside this bearish dealing range. We retrace back up there, came down, set relative equal lows. And then now we've come up, taken out that first level of internal buy side, taking out that second level of internal buy side, right? But until we trade above that high right there, we're still inside this bearish dealing range, right? So trading above the week will extend the bullish dealing range on the higher time frame up. But right now we're still inside a bearish dealing range right here. We're still inside this bearish dealing range, and we've come up to a healthy premium and taken out the internal buy side liquidity, right? We still got a little bit of buy side liquidity here at these relative equal highs, but you know, I like to watch the major points of liquidity, right? I like to watch where the elephant stepped in the pool. We created a high here, we moved. So I'm looking at all of this right here as above that high, right? We made a high here, then move. I'm looking at all of this here as above that high, right? We made a high here, then move, right? That high. So I'm looking at, we've taken that, and now that's the end of this bearish dealing range, right? We've retraced back up and we can still drop and take out this internal liquidity because we're still inside that bearish dealing range, right? So that's how you stop yourself from picking a top or a bottom, right? You want to see, where is my dealing range? What have we done inside my dealing range? And what can we still do, right? Remember, the algorithm use liquidity as rocket fuel, right? So you use the signatures to trade inside this dealing range, right? So from here to there, down here is the discount, right? So when you run your Fibonacci tool from the highest high to the lowest low, right? And we'll just put it on CE, anything, right? Below here is a discount. Anything above here is a premium, right? So if you're inside of this bearish dealing range right here, right, and you're down in this area here, right, you wouldn't be looking for a reason to sell, right? Because you're in the discount of the bearish dealing range, right? Okay, you wouldn't be looking for reasons to sell, right? You could look for a bullish range and look for a reason to buy in the discount of this bullish range because it's in the bullish, I mean, it's in the discount of the bearish range, right? So you don't expect the algorithm to want to try to sell in the discount of the range. Why? Because it set a high and it set a low. So now the dealing range is set. So you don't anticipate the algorithm to try to sell in the discount. You anticipate it to sell in the premium. So you can use that information to say, okay, I've set a new dealing range, right? And now, right, I've traded up here and then I've come down and I did not take that low, right? So now when I get a bullish signature over here, right, I know I did not take that low. I engineered liquidity, right? I'm not anticipating the algorithm to want to sell here because we're in the discount of my dealing range, right? So I can utilize the bullish side over here, right, to say, okay, I'm going to buy in a discount of this range here to trade back up to the internal buy side liquidity because I'm anticipating the algorithm to engage the buy side liquidity because it's in the discount of a bearish dealing range. So the bearish dealing ranges is looking to engage buy side liquidity, right? That's how you can utilize the order flow and price structure to trade within the range, right? To trade within the range. Okay. Um, and for those that's not a part of the gang or those that this is your first time tuning in, this is not just pointing at something as hindsight. We do this every day. Well, not every day. Monday, Wednesday, and Friday during tape reading, when we sit there and we watch the signatures and say, okay, this is a bearish signature, this is a bullish signature. We're looking for price to draw here, right? We're looking for price to draw there, right? This stuff really do work. You take the time to learn the concepts and it works. All right. So jump back over here on the ES. Uh-oh. 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 Somebody just got taken. Somebody just got taken. Sell side liquidity. What did we just say? If you got long off of this right here and held over the break, your butthole was clenched. Guess what? You just got rotted off the range. Mm, mm, mm. Tim, why did you have that low marked out? Because, right, if we look here, this is the last expansion leg of this, well, actually this entire dealing range, right? Price came here, took out sell side liquidity, created a new liquidity pool, right? Price moved above here, right? Took out buy side liquidity, created a new liquidity pool, right? If we look at this bullish dealing range right here, from there to there, right? That's the highest high, right? So I mark that as the buy side liquidity, right? If we look at this entire range here, this lower part of this dealing range, all of this right here is efficiently delivered, right? So all of this is efficiently delivered. And this is the last energetic move or displacement leg of this entire dealing range. So that's why I had that high and that low marked out as the range that I was watching to see what price was going to do, right? This high is the highest high. This low is internal sell side liquidity to this entire range there. That's internal sell side liquidity. That's internal sell side liquidity. That's internal sell side liquidity. All of these lows, any low that's inside of this dealing range from the lowest low to the highest high is internal sell side liquidity, right? So if the algorithm wanted to, it could trade all the way back down here to this new day opening gap, taking out all of this sell side liquidity and still go up if it wanted to. Why? Because it's internal sell side liquidity that's inside this latest bullish dealing range. And then when we take out that high right there, if we take out that high right there without coming back down and taking out that low, right? Right, we are just extending this overall buy program higher, right? Because right now that's the highest high right there. And if we squeeze this up, the lowest low go like way back. I can't even squeeze it up enough. So I'm just gonna stop there, right? We're just continuously extending the dealing rate, the buy program higher and higher and higher, right? So that's your highest high. And We've come up above all this buy side, got a deeper retracement, taking out that sell side, right? And then when we poke back above there, we're extending it up. You say, well, Tim, we took out a low. Isn't that a bearish break in market structure? I'm glad you asked that question. Yes, it is. Right. When we take out sell side, right, we take out a low that took out a high. Yes, that does give you a bearish break in market structure. But what you want to do is you want to come there, boop, right? Let me do this right here. Right. We're going to come there and we're going to mark out that line right there. Right. This is a 15-minute chart, but with that line where we marked it at, that's all the way back to the 5th, right? That's all the way back to June the 5th. That's much higher time frame, right? So we can go up to a daily, we can go up to a weekly, because that goes all the way back to June 5th. But let's go to a daily time frame first, right? And from that high that we made up there, right? From that high we made up there, and we started retracing back down, right? You want to ask yourself, does this higher time frame have a reason to come back down there that warrants a bearish break in market structure on the lower time frame? Yes, it does, right? We have an inversion fair value gap down here, right? We got a bullish mitigation block over here, right? Matter of fact, all these consecutive candles, but looking at the last up close right there, we got a bullish order block right there. We got a bullish order block there. We got a bullish order block there. All that stuff we was talking about before. So the daily time frame has a reason to come back down there, right? So that warrants a bearish break in market structure on the 15-minute time frame, right? Because to get that far down into a discount on the daily time frame, you will have to get a bearish break in market structure on the 15-minute. And if we look at the 15-minute here, you see that this retracement there completed a market maker sell model. We have our niche consolidation there, and we have our return down and take out that liquidity below that initial consolidation, right? That retracement completed a market maker sell model, right? And then now we're back over here on the right side of a market maker buy model over here, right? And looking to complete it up here and complete in that market maker buy model there would, well, like we said, would extend the overall buy program higher. All right. Now, again, it doesn't have to do that, but that's what we're watching right now. And I keep forcing that it doesn't have to do that because you never want to just marry a bias. You want to trade what you see, right? You want to trade what you see. You want to see, like, now we're here, right? And you want to have invalidation points. You want to see things do their job, right? So now we can you explain the market maker? I don't know what a market maker cycle is. What's a market maker cycle? What is that? I don't even know what that is. I don't know what a market maker cycle is. If you talk about a market maker model, what I was just saying, a market maker model, is that what you're talking about? The market, if you talk about a market maker model, just say yes. But I don't know what a market maker cycle is. Let me take a sip of water. Come on, Marlon. YES or NO? It don't take that long. Yeah, okay. A market maker model. A market maker model, you have two types of market maker models, right? You have a market maker buy model and you got a market maker sell model, right? The skinny of a market maker model is the algorithm will, if it's a, let me do this right here. All right, so if it's a you got a market maker buy model. Jesus Christ. Market maker sell model. Okay. So a lot of times you'll see me just mark it out as like a market maker X M, MMXM, right? And the X just stands for sell or buy when I'm talking about just market maker models. You might hear me say like you might see me have something like MMXM, and the X is replaceable, right? The X is replaceable for buy or sell. Okay. So with a market maker buy model, right? The algorithm will engineer buy side liquidity, right? It will engineer buy side liquidity. How does it do that? Right? It will go to a point, like just say it'll trade up to just say that we're gonna say this is a swing high right here. We got a swing high right there, right? And then we're gonna come over here, we're gonna put a swing low over here, right? So with a market maker buy model, right, this is a higher time frame liquidity pool. This is like a juicy liquidity pool where there are buy stops resting, right? Buy side liquidity is above here. Okay. So with a market maker buy model, what the algorithm will do, right? When it comes up here, right? And let's say it takes this buy side liquidity, meaning when I say take it, I mean trading above it, right? It will come up, and this is a higher time frame buy side liquidity. Let's just say it's a daily high, right? But this is fractal, so it'll work throughout any time frame. So whatever your higher time frame is taking out this higher time frame buy side liquidity, right? Then it will start to just range, right? It will range, no matter if it just range for a couple candles or whatever, right? So it will start to engineer liquidity, because when we're consolidating, we're engineering liquidity. So sometimes you will see it trade away and do something like this, where you'll get like offset accumulation where we trade above the consolidation, move down, then trade back, and then you'll see it do something like this. Then we'll come down and take out some sell side liquidity. When we come and take out that sell side liquidity, then it'll turn back around, and then it'll go back up, and it will take out that buy side liquidity that it engineered. Right now, this is a complete market maker buy model. And there are stages to the market maker models where when you initially the market is bullish, right? So you're looking for market maker buy models when you're in a buy program and the market is bullish, right? So the market is bullish, and then you see it take out some liquidity, and then it start to consolidate and engineer liquidity, and then it creates, especially if it creates relative equal highs like this right here. It takes out this high, right? Then it makes another high and then drops down. You say, okay, we have engineered buy side liquidity there because we created relative equal highs, right? And if Yolanda don't stop scamming me coming off mute like that. And then so when we move away, right, this is your initial consolidation, right? You have an initial consolidation, right? Initial consolidation, right? I'm abbreviating, and I don't know why this isn't updating, right? And there are now, when it comes to the distribution and the accumulation areas, there's no fixed amount, right? Your initial consolidation, that's always going to happen. And then when you start to move away with the ebbs and flows of the market going down, up, right? These ebbs and flows on the left side of a market maker buy model, these are your stages of distribution, right? When you're going down, it's distribution, right? So on the left side, and this one that I drew here, right, that will be your first stage of distribution. your second stage of redistribution, your third stage of redistribution there, right? Because it's stages of distribution as you're going down, right? And when you're looking at the stages of distribution, you're looking for, well, I ain't gonna get into the price engine models, but right, this is the stage of distribution, right? You look for a short-term run of buy side and then an expansion, right? You look for a trade back to fair value or a short-term run on buy side, then an expansion, a trade back to fair value. You see, like all of these here, you're coming back to some level of fair value and you're taking out some type of buy side, right? Coming back to level of fair value. And then when you get to the bottom, after running out some sell side liquidity, this is important. After running out some sell side liquidity, right, you will get what we call the smart money reversal, right? So down here is the smart money reversal. Why they call it a smart money reversal? Because smart money buys below lows, right? It buys below lows. Okay. And then this first stage, coming off this first stage of accumulation over here, they call this the low risk buy, right? Because this is the least amount of risk during this whole market maker buy model that you can incur, right? Going back to the terminus, right? This is the lowest amount of risk, right? This is your risk. This is your entry over here, and that's your reward up there. So that's your low risk buy. Once you get your low risk buy, then you get your first stage of accumulation, second stage of reaccumulation, and then you take it out. Now, you won't always have 3 stages. You won't always have 2 stages. Sometimes you will have one, sometimes you have two, sometimes you have two, sometimes you'll have one. But the concept is initial consolidation, distribution as stages of distribution, smart money reversal, low risk buy, stages of accumulation, and then terminus, right? And then the same thing for your market maker sell model, right? On a market maker sell model, it's the same thing where you come down and you take out some form of sell side liquidity, right? So market maker sell model, you'll come down and you take out some form of sell side liquidity, right? Then you engineer liquidity, right? And if you make relative equal lows, meaning like you got a low on the right that's higher than the low on the left, you say, oh, we engineering some sell side liquidity. And then you go into your first stage of accumulation, second stage reaccumulation, third stage reaccumulation, smart money reversal after taking out some form of buy side liquidity, right? Higher time frame, because you're looking for this when the market is bearish. So the market is bearish, it engineers sell side liquidity, then it manipulates away to some type of buy side liquidity, get you a smart money reversal, you get a low risk sale, right? Then you get first stage distribution, second stage redistribution, and then trade down to the terminus. Again, you won't always have 3 stages up or 2 stages up or 3 down, but you will always have an initial consolidation. You'll always have a smart money reversal and a low risk sell or low risk buy, and then some forms of distribution and accumulation, depending on if it's the right side or the left side of the model. And the way Michael teaches trading them, it's always to trade on the right side of the model. So if the market is bearish, right, you want to wait until you get your smart money reversal and trade and look for reasons to sell in a premium on the right side of the model, right? So if you come here to the smart money, to the low risk sell, you can look for a reason to sell here because you're in a premium of this dealing range or price leg, right? Then if you get to this area of this first stage of distribution, you can look for a reason to sell inside the premium of this price leg or dealing range. Then if you get over here, you can look for a reason to sell inside the premium of this dealing range or price leg going down until you complete the market maker model. And the same thing if you're bullish, right? Same thing if you're bullish, You wait till you get to the right side of the market maker buy model. Then you're looking to buy in the discount of this dealing range. You're looking to buy in the discount of that dealing range. You're looking to buy in the discount of that dealing range until you get back to complete the market maker model, right? And then looking at, right, looking at the chart here, right? Right, this one here, it's not super duper uber clean, right? This is very sloppy, right? It's very sloppy, but behind the concept of it is, right, you start here, right? You came up, you took out buy side liquidity there, right? You took it out, right? We engineered liquidity there, right? So we came down, we traded back up, then we dropped, right? So you just got one area of distribution over here, right? Then we dropped, we came below a low, right? And then now we've come back up, right? We got a low risk buy down here, and then we come up and we're here now. So we have, and you can have market maker models inside market maker models. So for this case here, we completed a market maker buy model here, right? But it's inside this overall market maker buy model. And that's the area where we said that completing this would extend our range up, right? Because that's the larger market maker model. Once we trade above there, we're completing that larger market maker model, and that will extend our buy program even higher. So that's market maker model. That's just a quick recap of a market maker model. And this quick recap has been brought to you by Smart Money Manuscript. The Smart Money Manuscript is an all-inclusive. Wait a minute. I had my notes somewhere. I don't know where I put my notes at. I can't find my notes, but y'all know what it is. It's a all-inclusive video series that's created for all traders. They can be you can be a novice, someone new. Oh, there it is. There's my notes. There are my notes. Are you tired of living paycheck to paycheck? Do you dream of life where financial stress is a distant memory replaced by true financial limitless possibilities? Get out of the way. I got to break this down. All right. You've tried budgeting, saving a little here and there, but deep down, you know there's something missing. You see others build wealth, traveling the world, and living life on their terms, and you wonder, how do they do that? The secret isn't a secret at all. It's about understanding a powerful principle of investing, trading, and to be honest, investing and trading financial, that can seem intimidating, overwhelming, and frankly, a bit exclusive. Until now that you have the market maker, the Smart Money Manuscript. Oh, sweat. It's hot in here. It is hot in here. Where was I? We was we were looking at the price, and then we started talking about the market maker models. Let me sip me some water. Hopefully that helped you out there, Marlon. Okay, so we we were running up all night long. All right, we were running up all night long. We opened up over here and put my weekly new week opening gap back on there. Right. And for those who don't know what a new week opening gap is, a new week opening gap is the difference between the closing price on Friday that's here, right? The closing price on Friday and the opening price on Sunday, right? The difference in those two prices gives you what's known as the new week opening gap, right? New week opening gap. Now, um, we opened here, traded up all night long, and then during the New York session, we took out Friday's high, and then we just traded back down into the range, and then finished the day off, closed at here, right around here, around the high of this 15-minute fair value gap on the day, right? 15-minute fair value gap on the day. So it was a trend day to the upside. And as you see here on this 15-minute candle, it was a strong trend day because until right now on this 645 candle, right, we didn't take out any sell side liquidity on the 15-minute time frame. Right, that's the first time on this 15-minute time frame that we took out, right, significant sell side liquidity. We did take out some short-term sell side liquidity here, right, but right, that's only because that gave us, and again, when we look at, right, how we was moving in this market maker model right here, this is what I was talking about. This is the price engine model of offset accumulation, right? We consolidate there. We're going up. We're on the right side of a market maker model, right? You start accumulating here, right? You're moving into an area of consolidation. You're on the right side of a market maker buy model. So this is a stage of accumulation, right? So you start accumulating and then you take out the sell side liquidity below the consolidation area, then you displace up above it, right? That's the price engine model of offset accumulation, right? Where you take the sell stops, expand, retrace back in, and then deliver, right? That's accumulation, expansion, reversal, retracement, deliver, right? That's the, what we call it, curd, curd, right? Right? Consolidation, expansion, reversal, retracement, deliver, curd, right? Also known as the price engine model of offset accumulation, right? The price engine model of reaccumulation, right, would be, uh, I don't have an example of it, but oh yes, I do right here, right? We consolidate there, right? And then we expand, retrace back to an area of fair value, and then deliver. That's reaccumulation. So you consolidate, you don't drop and take out the sell side, you just expand, retrace to an area of fair value, and then you deliver above the high, right? That's reaccumulation, right? This is offset accumulation, right? When you take the sell side and deliver, and reaccumulation is when you expand, retrace to an area of fair value, and then deliver. Right. So price didn't do much besides just run all night and then retrace after 10:30. So, hopefully y'all got something out of this. And that's all I got, man. It's 7:18. We done been on here for a little over an hour. Go ahead and call it there. Unless somebody got something for me. If ain't nobody got nothing, that's gonna be it. Tomorrow is third Tuesday, so no tape reading in the morning. Um Thursday is a holiday, and Wednesday FOMC rate announcement is in the afternoon. So be careful throughout this week, especially Wednesday morning. Be extremely careful Wednesday morning because in front of big news like FOMC, you know, a lot of times the market just takes your money, right? And sometimes it spills over into the day before, right? Big news, it has the tendency to create choppy price action right? The day of and the day prior. Sometimes it creates choppy price action the entire week before that news, but just be careful, right? Because we got the rate announcement coming up. I I haven't researched on like what the market be expecting the rate announcements to be in so long because I really don't care. I really don't care what the news is. I just focus on when the news is, right? And I hate to say I don't care because the news is important for like like a global economic stance. If you're into fundamentals for your investment and trading decisions, the actual information in there is important to you, right? But for me, right, I'm I trade more off of price action. So I don't really care what the news is. I just want to know when the news is so that when I know when to be cautious in the market and when to, you know what I'm saying, go heavy, right? So with that, I will bid you all adieu. If you got something out of this, press the like button, right? Hit the like button. Let me know that you got something out of it, right? All right, let me know that you got something out of it. You're welcome. I'm looking to see if it was anything in the comments that I missed. Scrolling back through. All right, all right, man. That's it. I appreciate y'all. Shout out my homeboy Sherwin. Peace. Until the next time I decide to get on Al Gore's internet, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you don't hablo Espanol. Uh, y'all be safe out here in these trading streets, man. Gone. Yeah.